Hello, welcome to episode 2 in this video series about the Ranger Expert Advisor, an expert advisor that I personally built to trade the Forex markets. If you didn't check out the first episode, I recommend looking at the last week episode, episode 1, about me starting a live account with this expert advisor with just $1,000. I thought that was conservative and something that pretty much anybody can do, or a good portion of people can do. I've been using this expert advisor on a demo account for the last 9 months. It's profited every single month. And in this video, I'm going to be going over the trades of this week, so the profits and losses of this week, and also talk a lot about backtesting and how to properly backtest this expert advisor and all the different settings, including stop loss settings as well, that you can use to, I guess, kind of fit your type of trading in your personality. So let's get into it right now.
All right, so here we are on my FX book. This is the Ranger EA version 2. This account has been tracked since January 7th of 2020, and we have had 1.2% profit, 260 pips this week with 14 trades on this account. So this is a trader's way with 500 to 1 leverage. This is Ranger EA version 2 at Oanda with 50 to 1 leverage, so quite a bit different on the profit compared to 500 to 1. So that's exactly 10 times less profit overall. But we've had only 6 trades, but still 121 pips overall profit on this account. So there is a difference from broker to broker, but the expert advisor is still profitable at every single one so far, at least that I've tested. All right, so here is the Ranger EA on my live account at Eagle FX with 500 to 1 leverage, and you can see that we've had 1.8% profit over the last 2 weeks. So this week, 0.74% with 11 trades. So that's 3 less trades than Trader's Way, but still 123 pips overall. So a quieter month so far in the last 2 weeks. We haven't had a lot of trades, but sometimes we will get some pretty big months. So for example, in March we had 6.76% profit, and in April also as well. So those were pretty volatile months. The criteria for our expert advisor was met. And so we had some really good trades. This was using the old version, or the past version of the Ranger EA, so that was the version 1. So overall profit will likely increase with version 2 because it's about 2 or 3 times more profitable than the previous version. All right, so let's get into the trades themselves. I'm going to start with the pound Canadian dollar, since this is the most the pair that takes the most trades. And we haven't had a ton this week, but I'm going to go over the ones that we had anyway. So this is the market pushing down. We had a push down and an inside candle. So we took a buy position. Market pushed up. We closed out in 30 pips profit on that particular order. Okay. So the market pushed up. We entered after an inside candle setup again, this time on the downside. So trade 1, trade 2, market push down, close for overall profit. All right, so that was on the 11th, so that was yesterday. We haven't had any trades today, and the markets are going to be closing here in about 40 minutes. All right, so trades earlier this week, we had a sell position, so looking for the market to go down. Didn't get on the first entry. And then the second entry is when the market pushed down, or the pair ended up going down, and we closed out both positions right here for an overall profit. Okay, so on the Aussie CAD and the New Zealand CAD, so no trades on these 2 pairs this week at this broker, but we did have some trades this past week, and I'm going to talk about this one real briefly. So this is on the 2nd of June. So order 1, 2, 3, 4, and 5. So overall 5 orders on a grid once we have the initial inside candle entry. And you can see that the grid started widening as the volatility started increasing. So more volatility means we get less orders, and this protects us or helps us not get in a tricky situation when volume starts to pick up, when news comes out, or unscheduled news, or just anything in the world happens. And so we don't want to be caught in a black swan event like what happened on the US dollar Swiss franc back a few years ago, where it moved 1,000 or more pips in a matter of minutes. Also, this happened during Brexit, and so this expert advisor has a nice filter to protect us from situations like that when volume and volatility kicks in. All right, so that is the Aussie CAD, and no trades this week overall. We did have trades close out on the New Zealand Canadian dollar right here, but they were taken last week, so we held these trades over the weekend. And you can see the positions here. They were really quite nice last week, where market pushed down, or the pair went down here, um, found some support. We entered our 2 trades and shot up, closed out for profit. And here we have the sell trades that happened after the continued push on the upside. So we entered 1, 2, 3, 4, push down, take profit, close out. All right. So it was a very nice closeout of profit there. Barely hit our take profit level. Some demo accounts didn't actually hit the take profit amount right there, or the pullback, but my live account did, which was nice at Eagle FX. Okay, so the next position, another sell trade after a push up. Sell 1, 2, 3, 4, 5, and 6. So that's 6 overall positions, which is a little bit high on the higher side for the New Zealand Canadian dollar. Typically, this pair does not have a lot of drawdown. It doesn't take a ton of trades, as well as the Aussie CAD as well. These 2 pairs don't take a ton of trades, but the drawdown is typically a lot lower. And the maximum drawdown over the last 10 years that I have seen in backtesting was a maximum of 17% overall. Okay, so lower drawdown, but also lower profit when it compared to the pound Canadian dollar. And the reason why is because we're running this on the 30-minute time frame. And it also is set to take a lot more positions as well. All right, so those are the trades overall this week. Lower profit, but still profit overall. So nothing to be crying about. Okay, so let's talk about backtesting. So backtesting, I ran one here just for you guys, just to talk about backtesting, because I think that you should really backtest this expert advisor if you are wanting to demo or anything like that. And backtesting in general, when it comes to any strategy, whether it's something that you purchased online or something that you found online or one of your own strategies, I really recommend looking into the strategy tester in the MT4 platform to develop and help guide your strategies so you can have a better idea of how they'll possibly trade in the future. So here is the pound Canadian dollar. That's the symbol that we're using. And we're using my expert advisor, the Ranger EA version 2. This is the public one because I want to hide some of the settings in here. Control points. This is the modeling quality. So modeling quality is very important when it comes to backtesting a strategy. So open prices is typically the least accurate. Control points is a little less accurate, a little bit more accurate than open prices, and every tick is the most accurate that you can get in the standard MT4. You can also download trading history online that has a 99.9 modeling quality, which means that it's about the most accurate backtesting data that you can get. But the expert advisor still performs very well with 90% modeling quality. I don't know why I can't say that, but so we have a lot of expert advisors out there actually kind of fail with a higher 99.9% backtest modeling quality or data. It's because they are based on indicators that fluctuate and don't move or are not very rock solid when it comes to increasing the backtest history data quality. And so this expert advisor, the Ranger EA, I've tested it so much, and it does stand up on 90% and 99.9% modeling quality, which makes me really happy. And a good strategy should be able to do that. Okay, so we have a time frame period of M30. That's what the strategy runs on. A spread of 30. It says 30 right here, but that means 3 pips. So we choose a spread of 3 pips because I feel like that's a good medium ground when it comes to commission and overall spread from the brokers that I'm using. If your spread is more than 3 pips on average, then I'd recommend trying to find somebody another broker, especially if it's more than 3 pips average on the pound Canadian dollar. All right, so I also use the same spread on the Aussie CAD and the New Zealand CAD because my brokers overall show a range of 2 to 4 pips on average with the spread on those pairs. Okay, so I ran a test here to show you the overall profit and loss. So I know it shows $470,000, which is pretty ridiculous, but don't trust that. All we're looking at is the equity curve. We're wanting to make sure it's going up. We can have an idea of how the strategy will perform over the long term, but we can't trust the actual profit data that's showing right here. A $1,000 account going in, turning into 480 is pretty incredible, but a 90% backtest modeling quality that I'm showing you right here, so 90%, with the same strategy. I'm not showing you the top of the statement because it shows the license key, which I want to keep out of the picture. So a $1,000 account turning into 144,676 is still really good stats for just one pair. So this is on the pound Canadian dollar, and you can see that we hit a 55% drawdown. So that was one of these moments in the test. And so it happened twice that we hit a drawdown over about 40% during the 10-year test. And so it doesn't happen very often, but we do need to prepare for those moments where the market could get crazy, and we need that extra margin so we don't blow our account. Now, it's really important when trading to try not to blow your account, right? Even a lot of people do that because they're trying for too much profit. So be conservative with how you use expert advisors because you should be looking at long-term trading instead of short-term fast profits. Okay, so this data here shows you lots of trades. It shows you 10 years of history of profitable trading, and you can see how it works with a grouping of trades that close out in an overall basket of profits. So we initially started with 1,370 right there. And out of these groupings of trades, and there are 1, 2, 3, 4, 5, 6 trades overall, we closed out for a $4 profit after these 6 trades were closed out. Okay, so going back to the backtest data, I'm going to show you how this expert advisor can be worked with for stop loss results. So I don't use any stop loss with the Ranger EA because I feel like the strategy doesn't really need it because we're taking really low risk on each trade, and I want to take out one of the predictions when it comes to trading, which is stop loss. Using a stop loss is basically you making a prediction that price won't hit a specific point, and that is a prediction, whether you like it or not. And so that's why I don't like using those predictions, because it allows the strategy to breathe. But you have to be very careful with when you're not using a stop loss to make sure that your risk profile is low enough to withstand lots of price data. It has to make sense within your strategy, whatever strategy that you're using. Okay, so let's try a backtest data of, sorry about that, backtest of closing by a percent loss of 10%. All right, so we're going to try this now. And we're going to show you that, and I want to prove to you guys here that using this strategy, it wasn't over-optimized. The strategy is not over-optimized to just fit a particular price data to make it profitable over the long term. I'm going to be using a lot of different, I'm going to show you real briefly, I'm going to be using a lot of different stop loss options, and the strategy is still profitable overall. Now, it's not as profitable as turning $1,000 into $140,000 over the span of 10 years, but it's still overall going up. You can see, but it's a lot more choppy, right? So that's because we're adding a 10% stop loss. All right, so what about adding, say, a little bit high, on the higher side, but a 30% stop loss? Okay, so we're going to try this now. So you can see that the strategy takes less actual dips in its equity curve because it's hitting 30% drawdown a lot less often. And so we're going to get a much smoother equity curve going on the upside. And you can see, what does that look like when we have a group of trades that are closed out in loss. It's going to probably be hard to find one because it doesn't happen very often. Okay, well, I can't find it. We'll find one that closes out in loss. But you can still see that we're at almost $23,000 profit from a $1,000 balance. And so not bad overall. So we did have a 46% drawdown using that particular stop loss. But let's try, say, 5%. Let's see what 5% looks like. And I think that 5% is a much better risk when it comes to stop loss trading. I think that if you're using 5%, then you don't have to worry too much about losing large portions of your account. But you can see that in this test, we had a pretty big losing period. But it does end up going up overall over the long term. So a 5% cutoff will work with this strategy as well. So you can see that it's versatile, and that's something that I want people to see, and I want people to understand during this video series, that I'm using this tool in the way that I want to, but it can be used in so many different ways depending on the type of personality that's wanting to use it. Okay, so let's get rid of the percent cutoff, and now let's use a oh, I don't have the stop loss actually in there, but it can be used with a actual stop loss and number, which unfortunately I'm not showing right here, but I'll do it in the next video, where you can have a stop loss on each specific order. So for example, like 50 pips on each specific order, and so when the market hits 50 pip stop loss on the first order, that one will be closed out, and on the second order. So in my next video, so series or episode 3, I'll be showing more stop loss settings that can be used with the Expert Advisor, and it's not just the ones that I showed you. It's not just 5%, 10%, and 30%. You can use so many different ones. I think it even works with 3% as well, which is pretty ridiculous. So if you want to use a stop loss of 3%, that's something that you can do. And you can see that it's still very profitable because I didn't actually set the setting to take place. So there we go. All right, so you got to make sure that you have the settings right. Um, and I still don't think I got it right. Okay, so now I'm closing by 3.5% profit. So now I've got it right. So this is with a 3% cutoff. And this is the last thing I'll show you guys before I go today. All right, so that's what we're looking at, and we do have moments where 3% is hit quite a bit in here, but we still creep up over time, and that strategy is still profitable. All right, so that's pretty much all I wanted to show you guys in today's video update. Hopefully the next one will be a little bit shorter because I want these to be under about 10 minutes long. And hopefully you guys can follow along and enjoy the series when it comes to algorithmic trading. Thanks for watching. See you next time.